Hello, hello, hello! Andrew here, and we need to talk. There are a ton of YouTubers out there today that are trying to convince you that if you follow their path, you can make $250 a day, $1,000 a week, and everything seems to start with zero money down, and it's all done passively. The cold hard truth, though, is that these videos go viral because 2 out of 3 Americans are living paycheck to paycheck. And just like lottery tickets, people are looking for the easy way out. And if you thought this was limited to just people with lower incomes, a recent study found that 53% of people that are considered to be higher income Americans are living paycheck to paycheck. Let that one sink in for a moment. Now, as you know, I'm not a fiduciary and I'm not a financial advisor, but I am a dad, and just like any other good dad, I'm not going to fill your head with BS, and I'm going to give it to you straight. And in doing so, I'm going to show you the reality of what it takes with some of the most common items that are pitched on YouTube, as well as afterwards giving you some tips and hints that you can take advantage of for your own journey toward financial freedom and toward building wealth. And for any of you who think I might be coming off as a Debbie Downer or even trying to discourage you from building wealth, the reality is I'm telling you what I wish I knew 25 years ago. Now, I found my financial freedom 4 years ago. Had I learned what I'm going to talk about in this video, I probably could have found it a dozen years earlier. So I'm just trying to make certain your head's not filled with a bunch of BS and a bunch of malarkey, as them old folks like to talk about, and make certain that you get the real scoop. So let's start out by taking a look at a Graham Stephan video where he proposes being able to make $250 a day. Now you can see it over here on the far right hand side, and just to go ahead and blow it up, let's take a look at this thumbnail. This thumbnail is suggesting $250 a day for a video that's titled How to Build Wealth with $0 the Easy Way, and it's suggesting you're going to learn how to make $250 a day. Well, there's 30 days in a month. 250 times 30 means that you're going to generate $7,500 starting from zero, or $91,250 a year starting from zero, doing it the easy way. Now, I can get behind clickbait as much as the next person. The reality is, in the median American income, where you're talking about U.S. median American income of $31,133, this video is suggesting that you're going to be able to make 3 times that with zero money down and doing it the easy way. I'm here to tell you that when you start looking at videos like this that talk about $200 a day or $300 a day or $1,000 a week, we need to rethink our starting point, and instead of focusing on what we're doing for $250 a day, I'm going to suggest instead we focus on how to get to $25 a day. Because I think once you see the numbers, you're going to realize that it's not quite as simple as what many of the people that are out there on YouTube tend to act like it is. Doesn't mean it's not achievable, just means that it's not so simple that everybody's going to do it on day one with no money down and apparently, the easy way. Just by removing that zero, we're still down to $750 a month that we're going to be trying to create via passive income. That's still life-changing money for many Americans. $750 extra a month, that's a huge portion toward your retirement. That would allow you to max out an IRA. That would allow you to be able to save for an HSA. It would allow you to put money into a 529 for your kids' college. Or it could allow you to eventually go ahead and create passive income of your own. And no analysis would be complete without taking into account taxes. Now, I realize the most uber wealthy of us don't pay as much in taxes because guess what? There's a lot of deductions that are out there depending on how you invest and depending on where you put your money. The reality is, though, until you have the money to start paying for accountants and paying for tax attorneys, chances are you're best off just planning to pay those taxes to begin with. So for this sake of argument, we're going to go ahead and we're just going to say that 1/4 of everything you pay is going to be in taxes. So for us to get to $750, we actually have to make $1,000 as opposed to $750. So that way we have the extra money on the side to go ahead and pay for taxes as it's needed. Keep in mind, those percentages only work if you're making less than $86,375 if you're single, or less than $172,000 if you're married. So now, with that out of the way, let's get into some of the most popular ways pitched. Dividends from your stocks, the OG method of making passive income. Basically, this whole idea is based around you buying a stock, which is like a sliver of a company, and then afterwards you sit back, kicking it up all high and mighty, and they just pay you for owning the stock. You don't have to do nothing. You don't have to run the company. You don't have to do anything. Maybe you want to vote in the future for an executive when shareholder voting rights come up, but you don't even have to do that if you don't want to. You could literally just sit back and collect checks. Companies that pay dividends are often well-developed companies with large moats that mean they don't get disrupted, and they're easy to find when you're looking online on Google. It's pretty easy to take a look at, say, Verizon and see that you get a 4.71% dividend if you were to buy a share of Verizon stock. And being that right now Verizon stock is trading for, maybe $53, $54 and some odd cents, that's about $2.65 every single year that the company Verizon would pay you just for owning a share of the stock. So therein lies the problem. Because for you to actually make $25 a day as an average, you would need to own 4,686 shares of Verizon stock to be able to average $25 a day. That's about $254,000 worth of Verizon stock just to average $750 a month as dividends. And that's if Verizon has a good year. What's to say they're not going to go through hard times in the future like we had the recession and just cut their dividend? That's completely possible depending on what you take. And some companies, their dividends, they go up and they go down. So it might not always be the same thing. That doesn't mean dividends are bad, because let's face it, the bonuses are, it's free, it's easy. You do no work. But the negatives are, the pitching that they give you that you can earn a reasonable amount of money off of dividends, that snowball needs to roll. And it needs to really roll and get really big before you're actually getting anything that you can live off of. That's the reality of dividend investing. I hate to say it. I don't care if the S&P 500, if you'd have been better off reinvesting all your dividends and you'd have gotten better money out of it or not. The reality is that amount of money is not going to be enough money to go ahead. And who's going to be median income household that's got an extra $254,000 laying around? It's just not real, all right? That's the end goal, is to hope to have that much money, not the starting point. Number 2, another YouTube favorite and darling, rental properties. Now, I live in Northwest Ohio, and I own rental properties here, up in the Toledo area. And I can assure you, even though the Midwest is known for cash flow, trying to get above a 7% ROI is not easy. Now, you can use leverage to go ahead and to maximize your gains. But keep in mind, outside of just paying the bills, you've got to cover things like vacancy, capital expenditures, and you've got to save money for maintenance. If you're not doing that, then chances are you're going to get wrecked sooner or later. It will happen to you eventually, and it will be violent. That means if you decide to go to a bank and get something called a portfolio loan, so you can get 3, 4, 5 houses all bundled up into one loan, that since the houses here might be, $50,000, if you can find a way after that expense to go ahead and to still pocket $250 per house, that you're still looking at having 4 houses before you make enough money that you're clearing that $25 a day hurdle. That's just the way it is. And to be real, real estate's not easy. That's one of the big lies that is being told here on YouTube. I'm not saying it's hard, where you can't do it. I'm saying it's harder than everybody likes to make it out to be. Everybody seems to think that you just get to collect a check and everything's hunky-dory. That's not the way it works. A lot of times people who manage real estate, they get stuck managing it themselves, which means you're the person that's going to get the 3 a.m. phone call when the toilet's plugged up. That means you're the one that's going to have to take care of it when the main sewer line backs up and you're having a really shitty day and you have a 1/4 inch of crap all across the bottom of your basement. Or maybe you're the one that's going to have to go ahead and take care of bed bugs. These things are real. They are things that have to be attended to, and eventually, if you're in real estate long enough, you will get your own horror stories. That's just the way of the world. Now again, if you go ahead and you make this portfolio loan, and you get 4 houses that are $50,000 a pop, chances are the bank's going to require 20% down. That means that you need $40,000 up front to execute this strategy. And I'll tell you, if you don't have an extra $10,000 just sitting around on the side, waiting for the next roof to go ahead and get repaired, you don't have enough money sitting on the side, even with only 4 houses. That's just the way it works. Inevitably, something will break. Bonuses to this strategy are, you get to help out fixing up communities. You get to provide somebody with a good place to live. And you get to benefit from appreciation. So there's definitely good bonuses to owning real estate. But negatives on the flip side are, you know what, that 3 a.m. toilet clogged call, that's yours to answer. Most people don't go ahead and hire out that property management. Especially when you're starting out, if you want to make money, chances are you're going to have to go ahead and do a lot of the work yourself. And the other thing you're going to have to do is educate yourself. Because the last thing you want to do is violate fair housing laws, violate local lead laws, or other permitting restrictions that you didn't know even existed and that cost your entire business to go goodbye because you get drowned out by fines. That is not the way professionals act. Next way pitched on YouTube, options, the wheel strategy. One of my favorites, actually. The whole idea behind the options wheel strategy is you have a set amount of cash, you start selling cash covered puts, and then when you get assigned, you turn around and you sell covered calls. If you do this job properly, you can physically make 4% a month trading stocks that you believe in and making a pretty good premium. It's actually pretty profitable. It's been one of the best ways that I have found of turning over cash flow consistently. Because you can assure that you don't buy the stock unless you want to buy it. That's what you're selling the contract. You can ensure that you're not selling the stock with a covered call until you want to sell the stock and it's at a price that you're comfortable with selling. You can be defensive with the roll strategies. So if the trade starts working against you, you can roll down and out for a put or up and out for a call. So that way you can still continue to earn premium. The negatives of this strategy, though, are the fact that it still takes $25,000 to be able to make 4% a month. That means that you somehow have to get from zero to $25,000 out of nowhere. I thought we were supposed to start with zero with this. I mean, don't get me wrong, putting $25 in a week is going to eventually get you there after, 5-6 years and hitting a couple of home runs and the right investments like Tesla. But the reality is this isn't something you're starting tomorrow. That's just not the way the wheel in options work. Plus, you could pick the wrong stock if you chase premium. If you chase premium, you are going to get burnt. So you do want to pick blue chip stocks that are going to be repeatable, that you know are safe. That's how you want to choose stocks. The biggest negative to this, though, is what I saved for last. Doing this strategy is not long-term investing. It's actually taking a portion of your cash and setting it on the side and assigning it something different as a job than just going and making money for long-term investments. It's literally putting it to work and saying you need to be repeatable and give me cash flow every single solitary month. That doesn't mean you can't structure it to whatever money you make out of your options, that you're taking 1/3 of that amount of money and putting it back into investments, 1/3 into taxes, and 1/3 into living expenses. You can do that. It's just a matter of it's really not long-term investing then. And that's something completely different. It's more along the lines of swing trading, is more along the lines of what the wheel strategy is in options. It's very profitable. It's just something to keep in mind. It's not the same thing as long-term investing. So now hopefully we've cleared up the picture on some of these and you're ready for some fatherly advice. The first thing I'll tell you is, like Robert Tepper says in all of the Rocky movies, there's no such thing as an easy way out. I love that song. This doesn't mean you can't find financial freedom. What this means is that with no easy way out, there's really only two paths available for you in order to find financial freedom. One of which is becoming an entrepreneur. And being an entrepreneur means you're going to work more than what you think you're going to. The second way is to do so through investments. And there's really only two ways to build up your investments. Get extra cash because you're working extra hours and put that money away, or be extremely frugal and save as much money as you can and put that money away. Both of those scenarios, whether or not you're doing it through investment or you're doing it through entrepreneurship or some combination of both, they take hard work. It's no easy way out to be able to accomplish. The second piece of advice that I have to give is the idea that you don't want to set your goals too high. I know in this episode we talked about trying to earn $25 a day. The reality is I would never tell somebody to start that high. That's just way too high and you're setting them up for failure. You're better off trying to figure out a way to make $10 a day. And I tell you this because $10 a day is still $300 a month. And for your average median American, that's still life-changing money. That's a big deal. That's an 11.5% raise for the median American income of $31,000. That's an 11.5% raise. And who here couldn't use an extra $300 a month just because? Working toward a goal that's achievable gives you a sense of satisfaction. My third piece of advice is something I heard Bill Gates say a long time ago. I'm going to paraphrase here because I'm probably going to murder it. But basically it comes down to, as humans, we tend to overestimate what we can do in 1 year and underestimate what we can do in 10 years. And this is powerful, especially for those that are younger. Because just like last night, I was cleaning around a church. And I had some high school kids helping me out to make certain that this church was clean. We signed up for volunteer hours. And guess what? I'm sitting there talking to them about financial freedom. And that if they save when they're young, that even by the time they get to 23, 24, 25 years old, they can have passive income streams rolling. Time is your most valuable asset when used properly. If you're young enough, it's something that'll let you compound and grow for the future. The fourth piece of advice that I'll give is don't be afraid to start small. Anybody who knows me knows that I suggest small amounts of money as low as $25 a week just to get involved in the stock market. To start putting money in so you can force yourself to learn. This is important because we look at $25 a week as a $20 bill and a $5 bill and it'll burn a hole in our pocket. But if we can consistently make a habit, after a couple of years, it really can compound. And you can start to get to the point that after, I'm going to say 10 years, you could be looking easily with not too much effort as getting a $50,000 to $60,000 to $70,000 amount sitting as a nest egg. And that's just for $25 a week. If you go ahead and you pick the proper stocks or just invest in index funds. It's not out of the realm of possibility. The fifth piece of advice is to, no matter what the decision is, do not rush into the decision. If you rush, you are more apt to be emotionally tied to one direction or the other, and emotions do not lead to success. Emotions cause you to deviate from your plan. And if you have a plan, you're better off sticking with the plan than you are not sticking with the plan, specifically in regards to finances. It's important that we make certain we understand where we're coming from and where we're going. And if we lose track of that by rushing into certain decisions, then we're just going to be like going bathroom in the wind and going all over ourselves is basically what's going to happen. And the final piece of advice that I'm going to give you revolves around failure. In this world, everybody likes to act as if you fail and you don't do something properly, like the world is going to end. It's the standard we hold our kids to when they're in school. It's the standard we judge ourselves when we're at work. It's the standard that we hold our spouses to if they don't act perfect. And the reality is, life isn't built around being successful every single day. Professional baseball players, as an example, that get into the Hall of Fame have batting averages of around 300. That means that 7 out of 10 times that professional Hall of Fame baseball player went to bat, he struck out, he failed, he went back to the freaking dugout. 7 out of 10 times he struck out and he failed. And here we are on the background trying to live our Facebook perfect lives, acting as if we're never going to do anything wrong. The reality is we don't need to be perfect. We don't need to have every single decision that we try to do in life become a success. We need to put ourselves in the place to take advantage of the successes that we have and set ourselves up for the best situations possible. If you were to spend more time, instead of thinking about failure and being scared that something's going to go wrong, as just assuming that you're already wrong and that your job is to be less wrong tomorrow than you are today, you would be better off. It's one of the reasons I maintain that picture above me up top of Elon Musk saying that very same thing, that you'd be better off assuming that you're wrong and your goal would be to be less wrong. It's because we should not be focusing on failure as if it's bad. We should be focusing on the failure to try and learn as being bad. Well, that about wraps up today's episode. What I want to know, though, is how you feel about all these videos proposing you can make $250 a day or $1,000 a week with little to no effort, zero money down, and just doing it passively. Tell me about it down in the comments below. And while you're down there, if you haven't done so already, please consider hitting that thumbs up button, clicking that subscribe button, and consider turning on notifications. It really does help out the channel. And thanks again for joining me today. Here on the Dad Manual, we produce videos twice every single week. And until next time, I'm Andrew Sherman. This is the Dad Manual, and always remember, failure isn't bad. Failure to try and learn is. Have a good one.